Hey traders, hope you're all well. So in this video, I'm going to address something extremely important. I'm immensely proud of many of you that in that you have started to get to a point where what my primary message has been in the videos is starting to make complete sense to you guys. And that primary message is simplicity. I just had a chat with Jonathan, and Jonathan said something which made me extremely happy, which was that he should wait and watch the charts until it makes sense, right? And that is accurate in how you should approach trading, right? So it isn't about, and there's a difference between when the market just automatically makes sense to you, or when you're deliberately going into your charts to desperately make the market make sense to you. Okay, and there's a massive difference there. Um, what I want you guys to start to understand completely is that when it comes to the ideal setups, when it comes to trading effectively well, hitting 90% plus to 100% win rates, especially in forex, the idea of simplicity is king. There's nothing more in existence. There's no holy grail beyond simplicity that's going to help you nail your trades. Okay, there's only some minor components to your entries. There's the analysis, there's deciphering where the market is going in terms of a direction, and then there's your ideal entry, right? The rest, which might be your exit of at a 20, 30 pip, 50 pip, or a structure that the market is going to reach to, that sort of stuff, that's all secondary. So what Jonathan really said was, so should I just watch it until it makes sense to me? And that's it. That's the answer. Absolutely. When you log onto your charts and you look at it, right? If just by looking at it within the space of the first 30 seconds or 1 minute, it makes sense to you, it's familiar, the market is doing something that you recognize, that is like your draw to further analysis to say, okay, my next point would be to confirm utilizing all my points of confluence, to confirm that this market is going to head in this direction. And now that I see this to be familiar, then now I'm looking for an ideal entry point, which is also familiar to me. And that's it. So, what I'd like you guys to do is when you're looking at your charts, if the market is giving you a whole heap of deal breakers, for example, like there is a directional move with pound AUD, correct? But there is also a lot of mixed colored candles, lots of them, lots of wicks as well. And when you say, well, this isn't simple, this is messy. If this is messy, then the market really isn't doing enough to grab your attention. Okay, it's you want the market to be in love with you, so it sets up for you. You play hard to get. It's gonna woo you. That's the whole point behind all of this. If you're having to chase the market, you're gonna lose. I guarantee you, if you ever chase the market, you're going to be one of those people that talk about 60% win rates and, hey, I'm still making money with a 60% win rate. I should be proud of myself. That's not the goal. Trading effectively is going to help you reach your financial freedom and live the life that you want to live. I don't want you to be stressed out based off trading, because a lot of times, if you are going to enter into trades in a messy market, what you're going to find is that you end up in a messy state mentally, psychologically, and it's going to stress the crap out of you. You don't want that. Okay, so please start looking at the charts from a point of view where the market has to come back and set up for you. Even if it's things like if the market goes up, spikes up, and then starts coming down, if there is any degree of speculation in your entry, you're stuffed. Okay, something Tina um, asked me a few weeks ago. We had a conversation about trading, and we were talking about stop losses in particular. And Tina says, so in reality, I don't really need to have a stop loss. I don't understand why I should have a stop loss. And she's 100% correct in what she was saying. I know many of you will disagree with me here, but why she is correct in that is saying she understood the basic premise behind trading and trading successfully, which is that all you're doing realistically is deciphering a directional move of the market. Where is this market going? That's all you're trying to figure out. Once you figure that out, your next step, and you'll figure this out with a whole heap of tools to establish confluence, and the tools probably would be your Fibonacci, your Elliott wave structures, your patterns, that sort of stuff. Once you've established that, and you are certain that this market is going to move in a particular direction, the next step really is just to find the best entry that you possibly can, and also to some degree forecast where this market's going to go to. So you might have an exit strategy, which would be 20 pips to 50 pips to 100 pips to previous structure, something along those lines. So and if that's those are all the elements that's required for a successful trade. So if you're doing that well, realistically, you don't need to have a stop loss. You will put in a stop loss, right? That's just security for yourself. That's just a what if the market does something that you're unaware of. For example, it was a couple of weeks ago when North Korea fired that missile over Japan, when the market had moved over 300 points in the space of, say, 45 minutes. Now, for anyone that wasn't aware that that missile had flown over Japan, um, they wouldn't have been aware as to why that one candle that I found in pound JPY had skyrocketed by about 80, 90 pips, right? So that sort of stuff, that's why your stop loss is there, just in case something happens fundamentally that's going to affect the market almost instantly and then force it to move in a direction against what your analysis has been. So that's why we put stop losses in. But what Tina was saying is absolutely correct as well, because your aim in all of your trades should be where your stop loss really is required. Okay, it's going to be there as a safety net, but it shouldn't be required, because you should be trading setups where you're almost 100% guaranteed within yourself, within your mind, your thoughts, and your feelings, that this is where the market is about to head. And if the market does not set up for you in the way you'd like it to, don't trade. That is the secret to success when it comes to Forex trading. That's it. There's nothing more to it. Shitij was asking me a question a few days ago, which had to do with Elliott wave structure and the recognition of it. Not kind of, it's not dominant in the market these days. It's getting harder and harder to recognize. Um, that's a good question in a lot of ways, but you guys already know the answer to it. The market's never going to constantly set up for you in a manner in which you recognize. So what I'm asking you guys to do is wait for the market to do so. And this is where patience comes in. This is why self-recognition comes in, recognition of your own thoughts and feelings and of who you are, what triggers you off. It's like saying this, and I'll give you an example. Say, for instance, there's you and another person close by, and this other person is somewhat of a bully, right? So they're either verbally or physically beginning to abuse you. Now, you could react, you could punch them in the head, you could swear back at them, say whatever you want to say back at them, right? Now, there's nothing wrong with your retaliation, but the question that would arise there is, who is in control? Are you in control of your own self and of your own emotions? Because that person is attempting to trigger you off. And once you are triggered and you respond, then they're in charge of you. So anyone around you can say and do whatever they like to you, but it's your choice on how you respond. The same applies to the markets. The market is going to continue to do whatever it does, right? Its role isn't there to entice you to take a trade. Yes, a lot of people do get enticed because there's going to be big fancy moves, and people emotionally will get attracted to that and say, look, I'm missing out, because it's always the missing out part, the lack, that we're attached to. Instead of saying, well, look, let it do whatever it's doing. I'm not going to jump into a bad entry, okay? And if it does, again, something that I recognize that I like, that's suited for me, that I'm in control of, then I'll take my trades. That's where you need to get to. So this is why when I talk about spirituality and trading, it comes hand in hand. It's going to apply to all areas of your life, from your relationships to work and career and trading and money. Um, this is where your spiritual growth comes in. This is all about self wisdom. So, what is it that triggers you off? So, and in saying that, again, I come back to this one point is that once the market has done something that is to your liking, that's ideal for you, you are in control, right? And the market can do absolutely anything it likes. If you don't jump in because it's doing something and you're feeling like you're missing out or you're going to be late to the party, so to speak, then you're in control. Okay, so please practice that. There was one other question I think in regards to, I forget who asked me this. The question is regards to entry. Okay, and one of the things that I did say to this person was that when the market sets up an entry, right? For example, here this was last week, pound USD market was in a channel. So say for instance here the market hits a high. Let me zoom in so you guys can see. The market goes ahead, hits its high at the EMA 200 and also the high of the channel, right? And this is officially the high of the day and the initial high of, well, the high of the Asian session and the initial high of the day. Then we get an aggressive move coming south, correct? Now the thing is this, say for instance that I miss this entry, right? So when the market pulls back, I take my entry. First take profit would be somewhere near the EMA 50, but then your stop loss is up here somewhere, and you will trail your stop loss with as the market moves, because our well, I shouldn't use the word speculation, but our projection here is that the market is going to make its way back down to this point here. Okay, now what I was saying was that if I was to miss my entry here, right, somewhere within this pullback, or even at the latest, at just the open of this candle, this wick here, if I was to miss that entry and say, for example, that the market comes down here and I come and see it, it's a little late, right? I come and see it here. The question was, would I take an entry going south here? And for me personally, the answer is no. It's too late. I've missed my entry. For you guys, it might not be. For you guys, you might say, well, I'd wait to see what the market does later on. And if I get another engulfing candle in the direction of my trade, then yes, I'll take a trade then. And that's a perfectly reasonable answer, right? And you could do that. But for me personally, when I am training my subconscious mind, when I'm trying to train myself to take ideal entries, you've got to it doesn't matter how long you've been training for, you've got to constantly reinforce to your subconscious mind that this is what I expect. I'm only expecting the best. I'm only expecting to take the best of the best trades. I'm not wanting to jump into any trades just for the heck of it. So here, when I come in and I have a look at this chart and say, for instance, this candle here is red because there's the strong long wick that goes up, right? So it's in the red here. Would I take an entry because I'm thinking, oh crap, I've missed out, I'm going to jump in so I don't miss out the rest? The answer is no, because I'm still in control here. The market is doing whatever it's doing, and yes, it has set up beautifully for me, but I'm still in control, so I decide not to. And the reason behind that is that the market will come back and give me another setup at another point in time. And something like this here could have been a possible setup where the market started to come back down again, right? But for me, again, the ideal place is here. If I take this, I will trail my stops and I will try and ride this for as far as the market wants to go. Sure, if I would take an entry here, right? Within just these two candles, we are already in, or three candles, we'd already be in about 30, 40 pips in the money down here, or 35 pips in the money, right? When I start to see these multiple wicks to the low here, especially after this massive wick, yeah, absolutely, I will possibly consider getting the hell out of that trade. But for all intents and purposes, depending on the mindset you're in, you'd probably get out somewhere down here, having hit 20, 30 pips, right? So, but if you weren't, obviously, you see multiple wicks forming here at the EMA 50, yes, you will consider getting out of that trade. Okay, so Start thinking along those lines, where is my ideal setup? Where is my ideal entry? What happens if my ideal entry is missed? Should I increase my risk by taking a later entry? That sort of stuff, it will define who you are, and it will constantly define how you approach the markets. This is why also a lot of traders have difficulty transitioning from trading demo to trading live, because when it comes to demo, they're not concerned about loss. You would probably just take an entry. Sure, there's going to be some risk there, but you'd probably just take an entry just for the heck of it, because you have nothing to lose. But when it comes to live trading, there's going to be some degree of reservation within you, because you know that if you screw up here, you're going to lose your own money, right? So that's when the trades you should be taking, a lot of traders probably wouldn't be taking them, and then out of panic, out of this desire not to miss trades or lose money, they probably take delayed entries, and that's where that gets screwed up. So here, in this case, someone would have jumped in here, the market pushes back, say for instance they got in here, market pushes back about 5 pips, including spreads. You're probably about 7 pips out of the money now, and then you get an aggressive green candle going up. You're 10 pips in the money now. Although the market did continue to come down later on, that person probably would have exited out of the trade themselves and taken maybe a 7 to a 10 pip loss, right? And this is because even though your stop loss was at the right place, right, you possibly would have panicked, and that becomes the biggest reason why 100% of traders lose money. And even the best of the best traders out there, they will at times panic. This sort of stuff is designed to make you question your own analysis, and this is the reason why I say that when you take an entry, if you're going to take it in an environment which makes complete sense to you, this sort of behavior here will probably make you think, but it won't make you jump out of your seat and start panicking. Whereas if you take a trade in a environment where it makes no sense to you, right, like this, then absolutely, when the market does something that is crazy, out of the ordinary, you're going to start to panic. Okay, so again, the last point that I'm going to state or restate here, because I think in my old age I'm practicing to be a drill sergeant with the Australian Army. Um, the idea here is to wait for the market to come to you and make complete sense. Okay, and in saying that, even things like Elliott wave structure, um, which most of the strategies out there is based upon, if the market makes clear sense to you, that's your key. That's your call to trade. If it doesn't, that's your call to go make yourself a cup of coffee, go read a book or something like that. Okay? And as you begin to understand this and begin to implement this in your trades, what you would find is that the number of trades you do diminish, but your in the money rate, your percentage will skyrocket, right? Closer to above 90% win rates. And also, what you're going to start finding is that trading becomes so much less stressful. You'd be able to make a tremendous amount of money that way. And primarily the reason is you'll be so much more confident because you know your entry is right, your analysis is correct, you know where this market is going, you know how many pips you could potentially pick up on this, and you know and understand how to trail your stops. And so in that, you'll say, look, I'm really confident to put more than one mini lot, one micro lot onto that trade, possibly even more than one lot to get to your 5 lots, your 10 lots trades, right? And just lastly, in saying that, start wrapping your head around this idea that minimal number of pips is also good for you. It's your friend. It's a lot of people out there I see are chasing a tremendous number of pips. It's not important that you chase a lot of pips. And I'll give you an example as to why. You could live comfortably, say for instance, if you're trading in pounds, correct? If you're trading in pounds and you get your account out to a level where it's say 10, 15, 20,000 pounds, okay? Now, if you've got a margin or a leverage, say, of 400 to 1, which is comfortable in my opinion, most of my accounts are 400 to 1. the amount that you would need in terms of margin to be able to take a one lot trade would possibly be about between 200 to 250 depending on currency pair, right? So 10 lots naturally would be £2,500. Okay, so say for instance, if you've got a £15,000 account and you have mastered your ability to select these easy setups that happen where the market comes and literally wants to make love to you and says, hey, here we go, I've set up for you, I've done everything that you want me to do, I'm wooing you here, and that gets your attention and you say, yep, okay, give me the ideal entry and I will enter. Say for instance, you're used to doing that. Then all you realistically need in order to create, say, £10,000 every month is to do a 25 to 30 pip trade every single week at 10 lots. That's it. That will get you, depending on currency pair, anywhere from 2,000 to 2,500 to £3,000 for the week. All right, and that could possibly happen if you're waiting for your ideal entries. Could possibly happen over the course of say 45 minutes to an hour. Sometimes you could probably nail it in one candle, right? Again, depending on currency pair. So start thinking in that light. Don't start chasing moves with the market throughout the week. You only really need maybe just 25, 30 pips or 50 pips maximum in 1 week to be able to say, you know what, I'm making $2,500 to $5,000 pounds euros per week, and that's going to amount to anywhere from 10 to 20,000 of that currency per month. Most people, given taxation around the world, in order to make say anywhere from 12 to $15,000 pounds euros for the month, will require a salary of about $250,000 per year, right, to be able to do that monthly. And this is post-tax income. So 12 to 15 grand post-tax income, that's what they'll need. You know how much they need to work at $250,000 pounds euros per year, right? So start thinking along those lines. Then you could achieve the same thing by just doing a 25, 30 pip trade eventually with a 10 lot trade once a week. And you do that for 4 times for the month, and you walk away with equivalent income to someone in earning over close to a 200,000 or so. And you could increase that again if you just did 50 pips, for example, per week at the same rate, $20,000 a month. Again, that would be equivalent to someone earning about 250,000 or 240,000 dollars, pounds, euros for the month. So please start thinking along those lines. Please regulate the number of trades you take. Please demand from the market, demand from the universe, demand from the supreme intelligence that you expect the best, not from just yourself, but from everyone and everything around you, that you deserve the absolute best. Also understand that spirituality and materialism go hand in hand. They're together. Your entire experience as a human being right now ties in with everything. It doesn't mean that in order for you to be spiritual, you've got to be poor, that sort of stuff. The basic premise behind this understanding is simply that you are the power that controls everything in your existence, not let the material aspects control you. Okay? Don't let an image dictate who you are. Don't let money dictate who you are. Don't let the markets dictate who you are. Right? If anything, even especially the markets, if it's enticing a response from you, one that is negative, one that is emotional, if even when you're looking at the charts in front of you and you're thinking, what the hell is going on? I don't get this. There's nothing wrong with you. That thought of you not getting this thought of you not being good enough to get this, that is the negative, the market enticing a negative emotion, a negative thought within you. That does not dictate who you are. Basically, how you need to look at it is to say, hey, market, you're looking butt ugly today. I don't like it. You're not doing for me what you need to do for me, and so I'm going to go do something else. Now, if you want me to come back and play with you, then go ahead and behave and do and show me something that is completely familiar to me where I want to play. Okay, so take the blame off yourselves. Start focusing on what's in front of you and start waiting. Be patient for the market to do something that's ideal for you. I haven't taken any trades this week simply because the markets haven't set up for me in a manner in which I like it to. Right, even with the likes of pound USD, that's absolutely beautiful. I don't know what the hell that means. Um, See, even with the likes of pound USD, even this move here um, on Monday, it didn't do what I wanted it to do. If this setup here happened at the EMA 50, that would have been my entry. And that, ladies and gentlemen, although that the market had moved significantly down, but just this thought pattern that I've got that, look, it's doing something, but it's not doing it where I wanted to do it. It didn't mean that I missed out on the trade. It just means that I'm going to miss out on losses down the track. That's the behavior that I want you to have. Don't say, I've missed the train here. Say, yes, market, you suck. You didn't do what I wanted it to do, so I'm not going to play. Go back and reset that up at a future point where it is where I want it to be, and that's the only time I'm going to take a trade. That thinking is going to prevent losses for you down the track. Okay? All right, guys, I've spoken too much. All the best. Yeah, that's it for now. Okay, bye.